Hello, this is Paul Mampilly for the Profits Unlimited channel. And in this week's video, I'm going to go to a question that I often get asked by readers, which is that how should you go about selling the stock that you have? Now, in previous videos, I've covered about how you should go about buying your stock. So in this video, I'm going to go about telling you how you should go about selling your stock. First of all, it's good to have a plan and a strategy for how you're going to go about selling your stock. And the first thing I'm going to cover is when should you sell your stock, meaning that the stock market is open from 9:30 to 4 o'clock. And within those hours, generally speaking, it's best to sell your stock after 10:30 a.m. and up to about 3:30 in the afternoon. And the reason for that is because at the opening at 9:30, you get a crush of orders, and oftentimes those prices reflect the fact that somebody's desperate to get out. And so the market makers and the market insiders give really poor prices if you want to sell out all in a hurry or in a bulk. So oftentimes by 10:30 or 11, the prices tick up a little bit and you get better prices. So that's number one, when to sell. The second thing to do is how should you sell it? And by that I mean, should you use a limit order, meaning that should you specify a price that you want to get, a minimum price you want to get, or should you use a market order, meaning that should you take the price that is there at the moment that you enter the order? And it really depends on the kind of stock. If your stock is thinly traded, if it's illiquid, if it's very small, if it's very unknown, you must use a limit order. In other words, you must set the price at which you want to sell. And that's because oftentimes right below the price that you see when you go to enter your order, the next price below that might be $1 less, 15% less, and you'll expose yourself to very low prices and being taken advantage of by the market maker and the market insider. So for thinly traded, illiquid, unknown, small stocks, use limit orders. However, if you're dealing in a stock that is very liquid, trades hundreds of thousands of shares, millions of shares a day, it's a very large brand name company like Coca-Cola or IBM or stocks like that, you can use a market order because you'll get the price that you see when you go to enter your order. So that's the how you want to go about selling your stocks. The third thing you want to think about is the stock situation, which is that are you selling because the piece of news has come out that has negatively impacted the stock and the business that the stock is in? If that's the case and something has changed, meaning that you thought the company was growing, it's no longer growing. You thought a company was going to get some approval. It's no longer going to get this approval. The facts have changed. In that case, you should go to sell your stock immediately and not wait, because in all likelihood, there's a long line of sellers that follow you. And in all likelihood, over the next hours, days, weeks, and perhaps months, there's just simply going to be more sellers as more and more people come to the same decision that you have come to today. The other situation that you might come to where you're going to sell your stock is where you're simply selling stock because you feel you own too much of a single stock and you want to raise some cash. If that's the case, you can take your time and simply pick your spots. Pick days when the market is up, pick days when that particular stock is up a lot, and sell your stock slowly as you want. The second situational based selling is based on your personal situation. For example, I've used stocks, for example, to fund down payments on a house, to pay for vacations, to pay for my kids' various expenses. And in that case, too, where I have a locked-in expense that I know is coming in the next day or week or month, in that case, I don't mess around. I sell the stock for the price that's been given to me. I focus on trying to get my money out of the market. And that's a case where you should do your selling sooner rather than later. However, once again, if your personal situation is where you simply feel like you want to raise some money, perhaps just to keep a little bit more cash on hand, once again, you can take your time and sell when it's most advantageous to you. So that's my video for this week. I hope you enjoyed the video. If you like this video, please like the video, subscribe to the video. And until next week, this is Paul Mampilly for the Profits Unlimited channel.